Welcome back, guys. In this video I want to give an illustration of a trader and an investor. So let's say January. This is date. We have January, April, June, and then September, and we have a trader and we have investor. That's Sam and Janet. So as of January, they gave both of them $1,000, and both of them bought 100 ETH, which is equivalent to $1,000. One ETH is worth $10. Are you getting it? One ETH is worth $10. The trader bought 100 ETH, which is worth $1,000. The investor bought 100 ETH too, which is worth $1,000. So as of April, the trader noticed that ETH has gone up and it has increased in value to $15, and it decided that this place is a resistance. Don't worry, we don't understand what the resistance is. We are going to be talking about it later in the course. Okay, he noticed this place is a resistance. There's a lot of supply in that region, so most likely the price will drop. So he sold his 100 ETH for $1,500 and kept the money in fiat. So it doesn't hold ETH again. Now he's holding $1,500. An investor is planning to keep maybe till September, ending of the year. So she's still holding her own ETH. So she still has 100 ETH when ETH was worth $15. So as of June, ETH has dropped back to $12. So one ETH is now worth $12. The trader is checking the chart, checking the price history. Then he decided to buy back. Now with $1,500, he will be able to buy more ETH, because 1,500 divided by 12 will give you 125. So he has 125 ETH now. The investor is still holding 100 ETH. Are you guys getting it? The investor is still holding 100 ETH. Nothing is changing. Just the value of the ETH is changing. But for the trader is increasing the units of his ETH, while the value of ETH is also growing. So September, the price of ETH is now $20. Let's say this is the end of the year. So now the trader has 125 ETH, which will be equivalent to what? To $2,500. But for an investor, she has 100 ETH. That's from the beginning of the year that she has been holding, because investing, you hold and keep the traditional way. Now she has $2,000. At the end of the day, the trader ended up with more money due to buying and selling during the trading session. For an investor, she held throughout the year. She didn't touch it, she didn't sell it, she didn't buy anything back. So that's the difference between a trader and an investor. Short period of time, the trader will buy and sell to increase profit. But for an investor, she prefers to wait till the end of the year. If the value goes up, then she's fine. This will be the end of this lesson. We'll see you in the next.